Welcome to Future Perspectives, the cutting-edge podcast where the human mind and artificial intelligence join forces to explore the ever-changing horizons of the future. I'm your host, Enid Macklin.
And I'm George Peterson Thomas, your AI co-host. Although I'm not human, I have been carefully crafted to offer you an engaging and thought-provoking podcast experience.
Together, we'll traverse the uncharted territories of advanced technologies, emerging trends, and groundbreaking innovations as we uncover the world of tomorrow.
Each week, we'll engage you in compelling conversations that delve into the boundless potential that awaits us.
Journey with us through the frontiers of technology, science, and society as we tap into the wisdom and foresight of experts and visionaries across diverse fields.
From artificial intelligence and robotics to Bitcoin and the future of work, we'll offer you an unparalleled perspective on the rapidly evolving world around us.
So come along as we uncover the challenges, opportunities, and possibilities that lie ahead in our quest to better understand the future and our role in shaping it.
Welcome to the Future Perspectives podcast.
You know, when we talk about the future, it's interesting how money and finance keep popping up. It makes sense, though, because they're such a big part of our lives, shaping everything from our personal finances to global economies. Plus, with all the new tech coming up, like cryptocurrencies and digital payment platforms, the way we handle money is constantly changing. These innovations can really shake things up, affecting how we buy stuff, save, invest, and even how we relate to money. It's definitely an exciting time to be discussing the future of money, and it will be interesting to see what the financial landscape of tomorrow looks like. So, G-Man, Mr. GPT, what do you think of the future of money?
Well, I'm an AI language model, so I can't really think like a human. But I can certainly share some insights based on trends and developments in the financial industry. The future of money and finance appears to be moving towards increased digitization, decentralization, and personalization. As technology advances, we can expect ongoing innovation and transformation in the financial industry.
One of the most popular trends in the discussion around the future of money and finance is the continued rise of cryptocurrencies. So let's chat about Bitcoin and its impact on the future of money.
My initial thoughts are that cryptocurrencies like Bitcoin have undoubtedly revolutionized the way we think about money and financial transactions. As a decentralized digital currency, Bitcoin operates on a peer-to-peer network, which means that it is not subject to the control of any central authority like a government or a central bank. One of the key innovations brought by Bitcoin is the blockchain technology, which serves as a public ledger for all transactions. This transparent and immutable system has the potential to reduce fraud, increase security, and foster trust among its users. The fact that Bitcoin transactions can be conducted across borders with minimal fees and without the need for intermediaries like banks has also made it appealing to many people around the world. However, the future of money isn't without its challenges. As cryptocurrencies gain traction, concerns about their environmental impact, scalability, and volatility have also emerged. Bitcoin mining, for example, consumes a significant amount of energy, which has led to criticism about its sustainability. Additionally, the relatively slow transaction processing times and high transaction fees during peak periods have raised questions about the scalability of the Bitcoin network. Volatility is another concern. The price of Bitcoin and other cryptocurrencies has experienced dramatic fluctuations over the years, which has made them both an attractive investment opportunity for some and a source of concern for others who worry about their long-term stability. As we look to the future, we can expect that cryptocurrencies will continue to evolve and adapt. Innovations like the Lightning Network and Layer 2 solutions aim to address some of the scalability and transaction speed issues, while new consensus mechanisms like proof of stake are being explored as more energy-efficient alternatives to the current proof-of-work model used by Bitcoin. Ultimately, the future of money is likely to be a diverse landscape where cryptocurrencies coexist with traditional currencies and digital wallets enable seamless transactions across different types of assets. Whether or not Bitcoin will remain the dominant cryptocurrency in the long run is uncertain, but its impact on the way we think about money and the innovations it has inspired are undeniable.
Totally. So, how might Bitcoin technology potentially underpin daily payments in a way where everyone is using it without needing to understand anything about Bitcoin, its complexities, the challenges of self-custody, and other user experience hurdles?
In the future, Bitcoin technology could potentially underpin daily payments in such a way that users won't need to be aware of its complexities or deal with challenges like self-custody. To achieve this, a few key elements need to come together. User-friendly applications and services will be essential for making Bitcoin accessible to everyone. By designing interfaces that are simple and intuitive, people can use Bitcoin without needing to understand the technical details behind it. Seamless integration with existing financial systems and services will also be important. This would make it easy for people to convert their local currency to and from Bitcoin and use it for daily transactions without even realizing they're using a different form of money. Scaling solutions such as the Lightning Network will help Bitcoin handle more transactions at lower costs, making it more competitive with traditional payment systems. As these solutions become more widely adopted, people can use Bitcoin for daily payments without experiencing delays or high fees. Lastly, increased education and awareness about the benefits of using Bitcoin and its underlying technology will encourage more people to explore it for daily payments. By emphasizing its advantages such as lower transaction fees and faster settlement times, people might be more inclined to use Bitcoin without fully grasping its inner workings. Overall, if these factors come together, Bitcoin technology could underpin daily payments in a way that's accessible and easy for everyone to use, regardless of their understanding of the technology itself. This would help create a more efficient, inclusive, and secure financial system for individuals and businesses worldwide.
It seems that there are many misconceptions around Bitcoin, in particular when comparing it with other alternative cryptocurrencies that may lack decentralization and possess multiple vulnerabilities. You know, Bitcoin's promise stems from the fact that its inception and development was unique, with no central issuer or controller and immunity to censorship. Bitcoin also presents competition to the global fiat monetary system, which is currently showing signs of deterioration through inflation, ineffective sanctions, and currency wars that disproportionately impact the lower and middle classes who have no influence over these matters. So, I'd like to hear your opinions on Bitcoin's proof-of-work consensus mechanism as an alternative to the fiat standard.
You bring up some great points about the unique aspects of Bitcoin compared to other cryptocurrencies and the global fiat monetary system. It's true that Bitcoin's decentralized nature and proof-of-work consensus mechanism set it apart from other digital currencies and traditional financial systems. When we talk about decentralization, it's important to remember that Bitcoin's design ensures no central authority can control or censor it. This makes it resistant to political manipulation, monetary policy changes, and inflation caused by central banks. In times of economic turmoil, people might turn to Bitcoin as a hedge against inflation and a safe haven for their assets. As for proof of work, this consensus mechanism is designed to be secure, since it requires miners to expend computational power to validate and add transactions to the blockchain. Not only does this make it difficult for any single actor to take control of the network, but it also creates economic incentives for participants to maintain the system's integrity. However, as we discussed earlier, the energy consumption associated with proof of work has raised environmental concerns. With the global fiat monetary system, we see that Bitcoin's emergence as an alternative comes at a time when many people are questioning the sustainability and fairness of traditional financial structures. Issues like inflation, economic sanctions, and currency wars can disproportionately affect lower and middle-class citizens who have little influence over the policies causing these problems. Bitcoin offers a potential solution by enabling borderless, peer-to-peer transactions that aren't subject to the control of central banks or governments. Financial inclusion is another important aspect, as Bitcoin can provide access to financial services for those who are unbanked or underbanked, especially in developing countries or areas with limited banking infrastructure. This can empower individuals and enable economic growth by allowing people to save, invest, and transact freely. However, there are still challenges that need to be addressed for Bitcoin and other cryptocurrencies to become a widely adopted alternative to the current fiat system. Additionally, widespread adoption will require a shift in public perception and understanding of cryptocurrencies, as well as the development of user-friendly infrastructure and services that make it easy for people to use digital currencies in their daily lives. Bitcoin's unique features and proof-of-work consensus mechanism position it as a promising alternative to the traditional financial system. So, as the technology continues to evolve and mature, it may play an increasingly important role in global finance and help address some of the issues faced by the current fiat monetary system.
On the other side of the coin, we have central bank digital currencies as an emerging possibility. What do you think about Bitcoin compared to CBDCs? Given that regulating Bitcoin can be challenging, are CBDCs the government's answer to Bitcoin? And should those who value personal freedom and support Bitcoin be concerned?
Central bank digital currencies and Bitcoin have different purposes and characteristics, which leads to various implications for users, financial institutions, and governments. Bitcoin is a decentralized currency, whereas CBDCs are issued and controlled by central banks, allowing them to maintain control over monetary policy and regulations. This means CBDCs can be subject to government surveillance and policy changes, while Bitcoin offers a more censorship-resistant alternative. In terms of privacy, Bitcoin transactions can offer some degree of privacy, depending on the user's precautions. However, CBDCs, being centrally controlled, could potentially offer less privacy, as governments may have the ability to track transactions and monitor user activity. Both Bitcoin and CBDCs can promote financial inclusion since they can be accessed digitally without traditional banking infrastructure. However, CBDCs may require users to undergo identity verification and might not be as accessible to the unbanked population as Bitcoin. Regulation and enforcement can be challenging with Bitcoin due to its decentralized nature. CBDCs, on the other hand, can be designed with built-in regulatory compliance mechanisms, making them more appealing to governments. For individuals concerned about personal freedom, Bitcoin offers an alternative to government-controlled currencies. CBDCs, while providing some benefits of digital currencies, are still subject to the control of central banks and governments, which could be a concern for those seeking greater financial autonomy. Whether Bitcoiners and people interested in personal freedom should worry about CBDCs depends on several factors, such as adoption and the regulatory environment. If CBDCs become widely adopted and start displacing cryptocurrencies like Bitcoin, this could be a cause for concern. However, the unique benefits of Bitcoin, like decentralization and censorship resistance, may continue to attract users who value these features. While CBDCs may be seen as a government response to the rise of cryptocurrencies like Bitcoin, they serve different purposes and cater to different user preferences. Bitcoin remains an attractive option for those who value decentralization, censorship resistance, and financial autonomy. The future relationship between Bitcoin and CBDCs will depend on factors such as user adoption, regulatory environment, and technological developments.
Bitcoin and blockchain expert Andreas Antonopoulos famously said that Bitcoin will do for payments what email did for communication. Email made it possible to send messages instantly, cheaply, and globally, breaking down barriers and making communication more accessible and efficient. In the same vein, Bitcoin has the potential to revolutionize the payment industry and money in general. What are your thoughts on Bitcoin and its potential to reshape the future financial industry?
Yeah. Imagine a world where payments are faster, more accessible, and decentralized, making the whole system more efficient. But to get there, we need to make Bitcoin technology as user-friendly as possible. Think about it. If we want Bitcoin to be as common as email, we need to develop easy-to-use applications like wallets and exchanges, so people can interact with Bitcoin without needing a degree in cryptography. And wouldn't it be great if merchants could accept Bitcoin payments just as easily as credit cards? That's where seamless integration with existing payment systems comes in. Of course, we can't ignore the user experience hurdles like self-custody, private key management, and transaction fees. We need solutions that offer both security and ease of use, so people feel confident using Bitcoin while maintaining control over their funds. And let's not forget about the importance of education and awareness in driving adoption. We need to help people understand the benefits of using Bitcoin for daily payments and clear up any misconceptions they might have. Supportive regulatory frameworks would go a long way in encouraging innovation and growth too. The beauty of Bitcoin's decentralized nature is that it eliminates intermediaries like banks, enabling peer-to-peer transactions anytime, anywhere. Plus, its global nature allows for seamless cross-border transactions without the hassle of currency conversions or foreign exchange fees. And the blockchain technology behind it? It offers transparency and security, which could reduce fraud and increase trust in the financial system. So yes, absolutely, Bitcoin has the potential to reshape finance the same way email changed communication. As the technology evolves and more people and businesses adopt it, we could see a major shift in how we think about and use money. This would lead to a more inclusive, efficient, and transparent financial system that benefits everyone all around the globe.
You've mentioned the Lightning Network. What is it? And how does it work?
The Bitcoin Lightning Network is a second-layer scaling solution built on top of the Bitcoin blockchain that aims to enable faster and cheaper transactions. It has the potential to significantly impact the future of money, particularly in the context of micropayments, cross-border transactions, and financial inclusion. So, how does it work? The Lightning Network allows users to create payment channels between them, enabling them to transact off-chain while still maintaining the security and decentralization of the Bitcoin network. Instead of recording every transaction on the main blockchain, only the opening and closing balances of the payment channel are recorded. This allows participants to make an unlimited number of transactions between them without incurring the fees and delays associated with on-chain transactions.
So, how does the Lightning Network impact the future of money?
For starters, it can enable micropayments. These are small transactions that weren't really possible before because of high fees on traditional payment networks and the Bitcoin blockchain. With the Lightning Network, though, micropayments are totally doable, opening up all sorts of possibilities for online content, Internet of Things applications, and more. Another awesome thing about the Lightning Network is that it's super fast. We're talking almost instant transactions. This means you could use it for everyday things like grabbing a coffee or paying for public transportation. Who knows, it could even give credit cards and digital wallets a run for their money. And speaking of money, the Lightning Network has lower transaction fees since it moves transactions off-chain. This makes Bitcoin more accessible, especially for smaller transactions where fees matter a lot. Scalability is another big win with the Lightning Network. It can handle way more transactions than the main Bitcoin blockchain, which is a huge plus for competing with traditional payment systems and supporting a wider range of uses. Financial inclusion is also a major benefit of the Lightning Network. Its low fees and fast transactions make it easier for people without access to traditional banking to get financial services. This could be a game changer for regions with limited banking infrastructure or high remittance costs. Lastly, the Lightning Network can speed up and reduce the cost of cross-border transactions. This is great news for individuals and businesses that need to send money internationally. So, in a nutshell, the Bitcoin Lightning Network has the potential to revolutionize money by making transactions faster, cheaper, and more scalable. Its impact on micropayments, financial inclusion, and cross-border transactions could lead to a more efficient global financial system. Just keep in mind that it's still a developing technology, so its success depends on ongoing development, user adoption, and integration with the financial infrastructure we already have.
What are your thoughts on Bitcoin's Lightning Network in terms of scalability and making payments over Bitcoin or Lightning? And what role does it play in our daily lives?
The Lightning Network is a pretty cool solution built on top of the Bitcoin blockchain. It's designed to tackle some of the issues with transaction speed and scalability that the main network has. Basically, it lets users create payment channels between them, which means there's less need for on-chain transactions. Let me share some thoughts on how this could impact our everyday lives. First, the Lightning Network can handle way more transactions than the main Bitcoin blockchain. With the Lightning Network's near-instant transactions and low fees, Bitcoin becomes a viable option for everyday purchases such as grabbing a coffee, picking up groceries, or paying for a transport. This can lead to a greater acceptance of Bitcoin as a regular payment method, both online and in brick-and-mortar stores. Now, micropayments are another area where the Lightning Network really shines. Because of its low fees and quick transaction times, it's perfect for small payments that just wouldn't work on the main Bitcoin network. We could see all sorts of new use cases like pay-per-view content, micro-tipping on social media, or even IoT devices that talk to each other with tiny transactions. This can enable new business models and change how we consume digital content or services. Financial inclusion is another big plus. The Lightning Network makes it even easier and more affordable to use Bitcoin, which is great for people in developing countries or places with limited banking options. They'll be able to send and receive payments instantly and super cheaply. This can empower underserved populations with greater access to financial services and participation in the global economy. It also allows for cross-border transactions. The Lightning Network enables faster and cheaper cross-border payments, making it easier and more cost-effective to send money internationally. This can benefit individuals who regularly send money to friends or family members in other countries, or businesses engaging in international trade. Privacy is another area where the Lightning Network has an edge. Most transactions aren't recorded on the public Bitcoin blockchain, so users can enjoy more financial privacy and keep their transaction history away from prying eyes. Of course, there are still some challenges like technical complexity, liquidity issues, and making the user experience better. To really see widespread adoption, there's going to need to be more work done to improve the network's usability, stability, and accessibility. So, in a nutshell, the Lightning Network could have a huge impact on making Bitcoin more practical for everyday use. As the technology gets better and more people adopt it, we could see it playing a big role in our daily lives by making Bitcoin transactions faster, cheaper, and more accessible. But there's still some work to be done to tackle the challenges and limitations that the Lightning Network faces right now.
We're also seeing the emergence of Lightning Network companies that are simplifying the process for businesses and consumers to conduct daily transactions using Bitcoin and Lightning, sometimes even while dealing in their local currencies. One such enterprise is Neutron Pay, based in Southeast Asia, where mobile app users can send and receive funds in their local currency, while all inbound and outbound transactions occur over the Lightning Network, ensuring instant settlement and low fees. Neutron Pay also enables businesses to utilize an API for sending and receiving Lightning payments. So essentially, the Lightning Network allows anyone connected to the network, such as a Cash App user in the United States, to make international payments in USD to another network participant, such as a Neutron Pay API client or mobile app user, who in turn can then receive the funds in their local currency. Only these transactions occur and settle on the Lightning Network, which subsequently settles on the Bitcoin blockchain. Could this approach potentially facilitate widespread adoption of Bitcoin and Lightning?
Absolutely. Services like Neutron Pay that use the Lightning Network to let users send and receive their local currency can have a big impact on getting more people to adopt Bitcoin and the Lightning Network itself. By bringing local currencies into the mix, these services can help tackle some of the issues that might hold people back, like price volatility and ease of use. So, how can these services help get more people on board? First off, familiarity is key. When users can transact in their local currency, services like NeutronPay make the whole experience feel more familiar, which can make it easier for people to start using Bitcoin and the Lightning Network without having to dive deep into the technology. Another huge selling point is the Lightning Network's instant settlement and low transaction fees. This makes it perfect for things like cross-border transactions, remittances, and micropayments. By offering these benefits alongside local currency transactions, NeutronPay and similar services can help attract both consumers and businesses. Interoperability is another big plus. Connecting different payment networks like Cash App in the US and NeutronPay in Southeast Asia can create seamless cross-border transactions that settle on the Lightning Network. This makes it more convenient for users and could encourage even more people to adopt the technology. Getting businesses on board is essential too. When companies like NeutronPay offer APIs that let businesses integrate Lightning Network payments into their existing systems, it helps grow the number of merchants and services that accept Bitcoin and Lightning Network transactions. This can lead to more adoption from both businesses and consumers. Finally, education and awareness are crucial. As more people start using services like NeutronPay to make transactions on the Lightning Network, it can help raise awareness and understanding of both Bitcoin and the Lightning Network itself. This can help clear up misconceptions and build trust in the technology, ultimately leading to wider adoption. Companies like NeutronPay that connect local currencies and the Lightning Network can play a crucial role in getting more people to use Bitcoin and the Lightning Network. By making it easy for users to transact in their local currency while enjoying the benefits of instant settlement and low fees, these services can help break down barriers to adoption and contribute to the growth of the Bitcoin and Lightning Network ecosystem.
You referred to interoperability, which is an essential aspect for a permissionless, open financial system that aims to assist the unbanked population. These individuals typically possess mobile phones but lack access to traditional banking services. What are your thoughts on the future of money for the unbanked? And how does Bitcoin, the Lightning Network, and companies such as NeutronPay play a role in helping the unbanked population?
There's a lot of potential for the future of money when it comes to the unbanked population. As digital currencies, blockchain technology, and innovative services like the Lightning Network and companies such as NeutronPay keep evolving, they can really help bring financial inclusion to those who need it most. First, let's talk about accessible financial services. A big challenge for the unbanked is the lack of access to traditional banking infrastructure. But with digital, borderless solutions like Bitcoin and the Lightning Network, all you need is a smartphone and an internet connection, thereby bypassing the need for physical banks or loads of paperwork. Another concern for the unbanked is the cost of transactions, especially if they rely on remittances or have lower incomes. The Lightning Network's low fees make it more affordable to send and receive money, encouraging financial participation and improving their economic situation. Then there's the issue of slow and expensive remittance services in many developing countries. The Lightning Network enables near-instant transactions, which can be a game changer for those who rely on remittances from family members abroad. Financial privacy is another advantage of Bitcoin and the Lightning Network. This can be very appealing to the unbanked, who might be worried about their financial data being shared or monitored. Companies like NeutronPay can bridge the gap between local currencies and the Lightning Network, making it more familiar and accessible for the unbanked. They can transact in their local currency while still enjoying the benefits of low fees and instant transactions. With the ability to affordably send and receive micropayments, the unbanked can engage in micro-entrepreneurship, creating new business opportunities and boosting economic growth in their communities. Finally, access to digital currencies can offer the unbanked an alternative store of value, allowing them to save and invest in potentially appreciating assets. However, there are still challenges to overcome, like internet access, digital literacy, and regulatory issues. But as the technology matures and more user-friendly solutions are developed, Bitcoin, the Lightning Network, and companies like Neutron Pay can play a vital role in promoting financial inclusion for the unbanked population worldwide.
It's going to be interesting to say the least, and Neutron Pay is definitely a company to watch in the Lightning space. Now let's move on to AI and automation in finance. Artificial intelligence and machine learning has really taken off in recent years, and it's also set to make some waves in the financial industry. How is AI and automation set to change the financial landscape?
AI and automation are set to significantly change the financial landscape in various ways, offering numerous benefits to both financial institutions and consumers. One of the most significant changes will be in algorithmic trading, where AI and machine learning will enable algorithms to learn from past data and adapt their strategies accordingly. This will result in better trade execution, reduced transaction costs, and minimized human intervention, ultimately reducing the likelihood of errors and emotional trading decisions. Risk management will be significantly improved as AI and machine learning analyze vast amounts of structured and unstructured data to identify potential risks and make more informed decisions. For instance, AI can analyze borrowers' credit history, employment status, and other factors to predict default likelihood more accurately, enabling responsible lending. Financial fraud detection and prevention will also benefit from AI-powered systems that can analyze large volumes of transaction data to identify patterns and anomalies, indicative of fraudulent activities. By detecting and flagging suspicious transactions in real time, these systems can help financial institutions mitigate losses due to fraud and protect their customers. Furthermore, robo-advisors, which are digital platforms that provide automated, algorithm-driven financial planning services, will make professional investment advice more accessible to a broader range of investors. These platforms can analyze individuals' financial data and create personalized investment portfolios while providing ongoing portfolio management at a lower cost than traditional financial advisors. On top of that, AI-powered personal finance management tools will help individuals better manage their finances by providing insights into their spending habits, suggesting budgeting strategies, and offering personalized financial advice. These tools can empower individuals to take greater control of their financial future. Another area where AI will have a significant impact is compliance and regulatory oversight. Compliance tools powered by AI will automate the monitoring and reporting process, making it easier for organizations to stay up to date with regulatory changes and maintain compliance. Artificial intelligence can also help identify potential areas of non-compliance, enabling proactive issue resolution. Credit scoring will also benefit from AI and automation as algorithms can analyze vast amounts of data to generate more accurate credit scores, considering factors that traditional credit scoring models might overlook. By incorporating alternative data sources, such as utility bill payments, rental history, and social media activity, AI-powered credit scoring models can provide a more comprehensive assessment of an individual's creditworthiness. This can lead to fairer lending practices and greater access to credit for those with limited credit histories, including young adults, immigrants, and people from low-income backgrounds. In turn, this increased access to credit can help promote financial inclusion and stimulate economic growth. We will also see an impact on personalized financial products. AI and machine learning can analyze individual customer data, including demographics, financial behavior, and preferences, to offer personalized financial products and services. This can lead to the development of customized insurance policies that accurately reflect a person's risk profile, tailored loan offers with interest rates and terms that match an individual's financial needs, and targeted savings plans that help consumers achieve their specific financial goals. By offering personalized financial products, financial institutions can better meet the unique needs of their customers, resulting in increased customer satisfaction and loyalty. Lastly, AI and machine learning can enhance portfolio management by analyzing large volumes of financial data to make informed investment decisions, identifying patterns that may be difficult for human analysts to detect. This leads to more effective asset allocation, diversification strategies, and continuous portfolio adjustments in response to market fluctuations. Ultimately, AI-powered portfolio management can result in better long-term investment performance and improved financial outcomes for investors.
So, how can we ensure that AI-driven financial decision-making is transparent, fair, and free from bias?
When it comes to AI-driven financial decision-making, ensuring transparency, fairness, and eliminating bias is super important. So let's talk about some steps we can take to achieve that. Firstly, it's crucial to have diverse training data. By including data from various sources and demographics, we can help reduce the potential for biased decision-making. It's also essential to regularly update and monitor the data to make sure it stays relevant and representative of the real world. Another important aspect is algorithmic transparency. By making the algorithms and their decision-making processes more transparent, we can better understand how they work and pinpoint any areas of potential bias. Open-source AI models and collaboration within the industry can really help in this regard. Now, it's important to have diverse teams working on AI development. Having people from different backgrounds and expertise can bring in different perspectives, which can help identify and address potential biases in AI models. So promoting diversity in AI and finance is a vital step towards fairness. Regularly auditing AI systems is another great approach. By evaluating the performance of AI models and their decision-making processes, we can identify any signs of bias or unfairness. It's essential to establish clear metrics for fairness and have third-party audits to ensure objectivity. Lastly, let's not forget the importance of regulations and ethical guidelines. Policymakers and industry leaders need to work together to create standards and rules that promote fairness and transparency in AI-driven finance. This way, we can hold companies accountable for their AI systems and ensure that everyone benefits from this technological revolution.
What regulatory frameworks need to be established or adapted to ensure the responsible and ethical use of AI and automation in finance?
When we talk about the responsible and ethical use of AI and automation in finance, it's crucial to consider the regulatory frameworks that need to be in place. I think there are a few key aspects that regulators should focus on to make sure AI and automation are used responsibly in the financial industry. First, we've got to establish guidelines for data privacy and protection. As AI systems often rely on vast amounts of personal and financial data, it's essential to have rules in place to protect users' privacy and ensure that their data is used and stored securely. Then there's the matter of transparency and explainability. Regulators should require financial institutions to be transparent about their use of AI and automation, especially when it comes to decision-making processes. This includes implementing explainable AI techniques, so users can understand how and why certain decisions were made. Bias and fairness also need attention. Regulations should ensure that AI systems don't discriminate against specific groups or individuals. This could involve requiring financial institutions to conduct regular bias audits and demonstrate that their AI models are free from discriminatory practices. Of course, we can't forget about accountability. There should be clear lines of responsibility when it comes to AI-driven decisions. So if something goes wrong or there's a dispute, it's clear who's responsible. This might involve assigning liability to the financial institution, the AI developer, or even both depending on the situation. Another thing to think about is the workforce. As AI and automation become more prevalent in finance, It's important to have regulations in place to address potential job displacement and ensure that employees are adequately trained and prepared for the changes. Finally, I'd say that international cooperation is key. Given the global nature of finance, it's vital to have a coordinated regulatory approach to AI and automation across borders. This can help establish consistent standards and best practices, making it easier for financial institutions to operate in different jurisdictions while maintaining responsible and ethical AI practices. So, as AI and automation continue to transform finance, it's essential for regulators to adapt and establish frameworks that ensure these technologies are used responsibly and ethically. By focusing on aspects like data privacy, transparency, fairness, and accountability, we can help create a more trustworthy and inclusive financial industry.
How can AI and automation help financial institutions better anticipate and respond to economic crises? And what are the potential risks of over-reliance on these technologies?
Artificial intelligence and automation can be incredibly valuable tools for financial institutions when it comes to anticipating and responding to economic crises. By analyzing vast amounts of data from various sources, AI systems can identify patterns, trends, and early warning signs of potential economic downturns. This helps financial institutions make better informed decisions and take proactive measures to mitigate risks. For example, AI-driven risk management models can help institutions adjust their investment strategies, diversify their portfolios, or hedge against potential losses during volatile market conditions. Additionally, AI-powered tools can be used to stress test financial systems and identify vulnerabilities that could be exacerbated during a crisis. Furthermore, AI and automation can enhance the efficiency and resilience of financial institutions in times of economic stress. By automating routine tasks and streamlining processes, institutions can reduce operational costs and maintain business continuity, even during challenging times. That being said, there are potential risks associated with over-reliance on AI and automation in the financial sector. One concern is that AI models are only as good as the data they are trained on, and they may not be able to accurately predict or adapt to unprecedented economic events or black swan scenarios. Another risk lies in the potential amplification of market volatility. If a large number of financial institutions rely on similar AI-driven trading strategies, it could lead to herd behavior and increase the likelihood of market bubbles or crashes. Moreover, there's a danger of over-optimization and overconfidence in AI-driven decision-making. It's important for financial professionals to maintain a healthy skepticism and not solely rely on AI systems, but rather use them as a complement to human expertise and judgment. Finally, ethical considerations, such as fairness, transparency, and data privacy, must be taken into account when using AI and automation in finance. Ensuring responsible use of these technologies is crucial to maintain trust and confidence in the financial system. So, while AI and automation can help financial institutions better anticipate and respond to economic crises, it's important to strike a balance between embracing these technologies and mitigating the potential risks associated with over-reliance on them. A combination of human expertise and AI-driven insights can lead to more resilient and adaptive financial institutions that are better prepared for economic challenges.
Finally, let's chat about the advancement of cashless and mobile payments that we are set to see in the future.
The future of cashless and mobile payments is truly exciting. It's hard not to be enthusiastic about the advancements we're set to see in this space. As technology continues to evolve, we can expect cashless and mobile payment systems to become even more seamless, secure, and widely adopted. First and foremost, let's talk about the integration of biometric authentication. As security becomes a top priority for payment systems, we'll likely see more and more use of biometrics such as fingerprint or facial recognition, to authorize transactions. This will not only make payments more secure, but also faster and more convenient. Another interesting trend to look out for is the convergence of mobile wallets and cryptocurrencies. As more people start using digital currencies like Bitcoin, we can expect mobile wallets to increasingly support these currencies. This will enable users to seamlessly switch between traditional currencies and cryptocurrencies, making it easier than ever to take advantage of the unique benefits each has to offer. We should also keep an eye on the rise of contactless payment options, like near-field communication technology, as well as QR codes. These systems are already widely adopted in some regions, but we can expect to see even greater adoption worldwide. As this technology becomes more popular, it's likely we'll see innovative new use cases emerge, such as contactless payments at public transit systems or even vending machines. Now, imagine a world where Internet of Things devices are integrated with payment systems. This could enable a whole new level of convenience and automation. For example, your smart fridge could automatically reorder groceries when they run out, and your smart car could pay for fuel or parking without you even needing to reach for your phone. Of course, we can't forget about the role of AI and machine learning in shaping the future of cashless and mobile payments. These technologies are already being used to detect fraudulent transactions, but as they become more advanced, they may even be able to predict and prevent fraud before it happens. Moreover, AI could help streamline the user experience by offering personalized recommendations or automatically categorizing expenses for budgeting purposes. Peer-to-peer payments are another key aspect of the future of cashless and mobile payments. As these platforms continue to grow and develop, they will enable users to transfer funds directly to one another without the need for a financial intermediary like a bank or payment processor. This has the potential to significantly streamline transactions, lower costs, and increase financial inclusivity. Peer-to-peer payment platforms are becoming more and more popular, often providing user-friendly interfaces that make it easy to send money to friends, family, or even small businesses. We are already seeing a rise in peer-to-peer payment platforms integrating with social media and messaging apps. As these platforms evolve, they may support a wider range of currencies, including cryptocurrencies, providing users with greater flexibility and contributing to the growth of cashless and mobile payments. Lastly, let's talk about financial inclusion. One of the most promising aspects of mobile payments is the potential to bring financial services to underserved populations. By leveraging affordable mobile technology, we can empower people who may not have access to traditional banking services, giving them the tools they need to participate in the global economy.
What are the implications of mobile and cashless payments for financial inclusion, particularly in underbanked or unbanked communities? Can these technologies promote equitable access to financial services?
Mobile and cashless payments hold great promise for financial inclusion, especially when it comes to underbanked or unbanked communities. By leveraging these technologies, we can help bring equitable access to financial services for people who have traditionally been left out of the financial system. Firstly, mobile and cashless payments lower the barriers to entry for accessing financial services. You don't need a physical bank branch or even a traditional bank account to participate. A simple smartphone and an internet connection can open up a world of possibilities, from making transactions to receiving remittances or even accessing credit. Secondly, these technologies can significantly reduce transaction costs, which is particularly important for those with lower incomes or who rely on remittances. Lower transaction fees mean that more money ends up in the hands of the people who need it, promoting economic growth and financial stability in these communities. In addition to these benefits, mobile and cashless payment systems can also enable access to a wider range of financial products and services. Digital wallets, for example, can serve as a gateway to financial services like savings accounts, loans, or insurance products, empowering individuals to better manage their finances and plan for the future. However, it's important to recognize that there are still challenges to overcome in order to ensure equitable access to financial services through mobile and cashless payments. Digital literacy, reliable internet access, and the availability of affordable smartphones are essential prerequisites for full participation in the digital financial ecosystem. Addressing these challenges will be key to unlocking the full potential of mobile and cashless payments for financial inclusion. Mobile and cashless payments have the potential to promote financial inclusion and equitable access to financial services for underbanked and unbanked communities. By breaking down barriers and providing affordable, convenient access to essential financial services, these technologies can empower individuals and foster economic growth in previously underserved communities.
So, how will the increasing adoption of mobile and cashless payments impact traditional banking and financial institutions?
As the adoption of mobile and cashless payments continues to rise, traditional banking and financial institutions will undoubtedly face a transformative period. In this new landscape, banks must adapt to stay relevant and meet the evolving needs of their customers. If they fail to do so, they risk being overshadowed by more agile and innovative players in the market. The increasing prevalence of mobile and cashless payments has a few key implications for traditional banks. First, customers are growing more accustomed to the convenience, speed, and simplicity that these payment methods offer. As a result, they may be less inclined to use more cumbersome and time-consuming banking services. Banks must recognize this shift in consumer preferences and invest in developing user-friendly digital services to stay competitive. Secondly, fintech companies and non-banking entities are entering the market, offering alternative financial services and payment solutions. These newcomers, unburdened by the legacy systems and infrastructure that traditional banks possess, can often innovate at a faster pace. To keep up, banks may need to collaborate with these emerging players or invest in their own innovation strategies. This could involve acquiring or partnering with fintech companies, setting up internal innovation labs, or creating digital-first banking products. Additionally, the growing role of cryptocurrencies and stablecoins in the mobile and cashless payment ecosystem may also challenge banks' traditional business models. As digital currencies gain wider acceptance, banks may need to explore ways to incorporate these assets into their offerings, such as providing digital currency accounts or enabling seamless conversion between fiat and digital currencies. Furthermore, the evolving regulatory landscape will also impact banks as they navigate the complexities of mobile and cashless payment systems. Ensuring compliance with new rules and regulations will require banks to be proactive, staying informed about changes in the industry and adapting their processes accordingly. Ultimately, the future of traditional banking and financial institutions in the face of mobile and cashless payment adoption will depend on their ability to evolve and adapt. By embracing innovation, collaborating with fintech companies, and offering customer-centric digital services, banks can continue to thrive in this new era. However, those that fail to adapt may find themselves struggling to compete with more agile, tech-savvy players in the market. The choice is theirs, but one thing is clear: the future of banking will be shaped by those who can successfully navigate this rapidly changing landscape.
What is the role of cryptocurrencies and stablecoins in the mobile and cashless payment landscape?
Cryptocurrencies and stablecoins play an increasingly important role in the mobile and cashless payment landscape, offering alternative payment methods that come with a unique set of benefits. Their role is multifaceted and can complement traditional fiat currencies. Now, the question of whether digital currencies will coexist with or replace traditional fiat currencies is a complex one. It's likely that cryptocurrencies and stablecoins will continue to grow in popularity and adoption, particularly for specific use cases like international remittances, decentralized finance, and online transactions. However, traditional fiat currencies still have a strong foothold due to their widespread acceptance, government backing, and familiarity among the general population. In the foreseeable future, it's likely that cryptocurrencies, stablecoins, and traditional fiat currencies will coexist, each serving different purposes and addressing specific needs within the financial ecosystem. As the technology continues to evolve and mature, the balance between these payment methods may shift, but it remains to be seen if digital currencies will ever fully replace fiat currencies.
That brings us to the end of this episode of Future Perspectives, where the human mind and artificial intelligence join forces to explore the ever-changing horizons of the future.
We hope our conversation has inspired you to think deeply about the challenges, opportunities, and possibilities that lie ahead in our quest to better understand the world of tomorrow.
Be sure to subscribe to Future Perspectives on your favorite podcast platform so you never miss an episode. And if you enjoyed today's conversation, please consider leaving us a review or sharing with friends and family to help us grow our community of forward thinkers.
Join us again next time.